Hello and welcome to Byju's Exam Prep IAS. Before we start with our today's analysis, we have a small announcement. Byju's Exam Prep IAS will be going live at 8 p.m. today. Why? Because the UPSC Civil Services preliminary examination was conducted today. So what is that we are going to do? We will analyze this question paper. We will discuss what these questions were. We will also put out the expected cutoff as well. So please do tune in at 8 p.m. sharp on our YouTube channel so that you can get an entire perspective about the CSE 2022 prelims question paper analysis. Let's get started and look into the first article. The first article says, why are FPIs dumping Indian stocks? Let us try and understand what is this article all about. When we look into the statistics, foreign portfolio investors continued their selling spree in the month of May, pulling out as much as 44,000 crore, which is equivalent to $5.7 billion from the domestic market. This happens to be the worst sell-off from the market ever since the March 2020, when foreign investors dumped shares worth 58,632 crores due to the scare of COVID-19. This sell-off in the month of May is also the second largest monthly outflows recorded in the domestic market since the year 1993. So what are we speaking about? We are speaking about the foreign portfolio investors. The first important question: who are these foreign portfolio investors? As the very name denotes, you have three words here: foreign, portfolio investors. What do we understand by foreign? Any person who is not a citizen of India, if he invests in the Indian market and if he happens to buy the Indian equities, let's say for example he invests in the stocks or in the bond market, commodities, cash and cash equivalents, and in the exchange rate regimes, such a person investing in India is called as the foreign investor holder. So basically, if you are a person investing in the stock market, you will become the domestic person investing in an Indian stock market. How about you investing in United States of America? So you become the foreign portfolio investor. So any person who is not a citizen of that particular country invests in another country to extract some returns is what is called as foreign portfolio investor. So a foreign portfolio investor are those people who invest funds in the stock market in some other country, or it can be in bonds, commodities, or exchange market, so on and so forth. Why are we discussing this? That is because, as we just discussed, according to the statistics, the foreign portfolio investors have pulled out as much as 44,000 crores in the month of May. This means that the stock market is bleeding. It is not bullish but bearish in the stock market. It is in this particular backdrop we have to understand why do the foreign investors invest in another country. That is because they are expecting the returns in the market. They believe that there will be a growth. When there is growth, the industries also perform better. When the industries perform better, the capitalization may increase in the near future and there would be much better returns. There would be dividends, and as a result they start investing in a foreign market. So expecting an attractive returns because of the economic growth in that particular country, we have a foreign investor investing in one of the countries. If we look into the statistics, as per the data from the National Securities Depositories Limited, FPIs brought in about 3,682 crore in the year 2002. This grew to about 1.79 lakh crore in the year 2010. So what does this mean? This means that they were expecting an economic growth during this particular period, and as a result they started investing a lot of money. The year 2017 saw FPI inflows exceed to about 2 lakh crore. Likewise, FPIs withdrew 1.18 lakh crore in March 2020 alone, the month when India announced a nationwide lockdown, triggering concerns around the economic growth. So during an earlier period, they started investing in India because they expected economic growth, but during the period of 2020, when COVID-19 hit, they also expected that there'll be no more economic growth. The government had imposed restrictions, the economic activity could come for a standstill, and as a result, they withdrew the money from the Indian stock market. In tandem, the benchmark stock index Sensex fell from 42,270 in February January 2020 to 25,630 in March 2020. So this basically depicts that the stock market is highly volatile. It can actually make a person's wealth bleed as well because of the foreign portfolio investors withdrawing from the market. They may also invest in bond market as well. They may also invest in commodity market as well. They may also invest in exchange rate as well. So when we look into the foreign portfolio investors, they invest because they feel that the country may have a good economic growth, and because they are investing, they could also expect returns, which is why they start investing in a particular country. Why have the FPIs been selling Indian holdings right now? That is because FPI sold assets worth 44,000 crore in May 2022. This is the second highest sell-off in a month since 1993 after March 2020. Why is that they are selling right now? That is because after the COVID-19, there was a particular period where there was economic recovery. But post-pandemic recovery in the Indian economy has been very uneven as well. This is not growing in a consistent pace. It is not growing at an optimum level. And as a result, they feel that this may not be good for their money, which is why they are withdrawing. The second wave of the COVID-19 pandemic in 2021 devastated lives and livelihoods. So it is during the second wave we had lot number of people who passed away. Then we also had third wave this year as well. So what we are seeing is a maximum fluctuation in the market. So on one side, whenever there is economic recovery, it is also followed by another wave of COVID-19 as well. So the markets are not even. They are not able to extract the money. They are not able to get the returns, which is why they feel that since the Indian economy is uneven, is not going as per their expectations, which is why they are withdrawing their money from the Indian market. Add to this the return of the pent-up demand in the economies worldwide as the pandemic subsides. What does this mean? Let's say, for example, during the COVID-19, what we had were restrictions in the demand and supply. But after the COVID-19 subsided, what does it mean? It means the COVID-19 instances came down, and as a result, demand started increasing. So when demand started increasing, there has to be a commensurate increase in the supply as well. But because the economic activity was not all that good, the supply did not happen. The demand started increasing. This also boosted the inflation as well, and this is why they were not able to meet up to the standards. Followed by this, even as industry was grappling with the challenge, Russia launched an attack on Ukraine, creating a lot of inflation in the country. So when we speak about Russia launching an attack on Ukraine, we are all connected in a globalized world. We also require petrol from Russia. There are also countries which also take natural gas from Russia, and there are countries which also get imports of wheat from Russia. There are also countries which also get sunflower oil as well. Since there was invasion of Ukraine by Russia, it all resulted in blocking of multiple products. Economic sanctions were imposed on Russia. This ultimately meant that there was demand and supply mismatch once again, resulting in inflation. So with an apprehension that this inflation will further continue, and we know for the fact what is happening in Sri Lanka as well, many other countries are also witnessing a major problem, and India to a larger extent is also currently having inflation. The consumer price index is about 7.8%. The wholesale price index is about 15.8%. And as a result of this inflation, these foreign portfolio investors feel that there could be a problem in the near future, which is why they are withdrawing all the investments that they had made in the stock market. So consumer expenditure is not working out. The commodity prices are increasing. The overall inflation has accelerated, and as a result, what you have is these foreign portfolio investors who are taking away their money. In fact, the rising bond yields in the United States of America, an appreciating dollar, and the prospects of more aggressive rate hikes by the Federal Reserve in United States of America, which is good for them, which is why they are withdrawing their money from the Indian market. What could be the impact because of this? The local currency will take a beating. How exactly will this happen? Let's say, for example, we have the foreign portfolio investors. These foreign portfolio investors would have invested a lot of money into the Indian market. So what do? They bring out their dollar, they invest in the Indian market, and they buy the Indian money. If they are selling off, what would happen? They would take away their dollar and they would give out their Indian money as well. That that is the rupees. So when they're taking away the dollar, they release the money, that is the Indian rupee, and as a result, the Indian rupee gets flooded into the market. There is more Indian money in the market, there is more rupee in the market, and as a result, in comparison to the dollar, you equate dollar with the rupee. What happens? There is appreciation of the dollar, there is depreciation of the rupee, that is, there is more money in rupees, and as a result, local currency takes a beating. About a year ago, it was trading in the region of 73 to a US dollar. It is now flirting with about 78 a level. So when this happens, these people go about giving their local currency, that is the Indian rupee, they take the dollar or any other country from which they have invested. So this ultimately means that there would be a beating on the local currency. With a weaker rupee, we have to shell out more funds to import the same unit of the goods. So we have to spend more to import a particular good from another country. The import cost also start increasing as well. And when it comes to India, the major problems that we will have is with respect to the oil. So whenever our currency falls, we may have to shell out more when it comes to purchasing the oil, and this could ultimately mean that it will hurt our economy very badly. The selling actions have also triggered a significant decline in the benchmark indices, resulting in a drop in the market capitalization of number of companies as well. So what we have is that the investors, the domestic investors, will also suffer. Why? Because they would have invested in the stock market, but now with all these foreign portfolio investors withdrawing, their money could have also depreciated. Let's say, for example, you might have invested in one of the company's shares, and if this particular company's shares would have given you a considerable profit, but all of a sudden, because the FPIs withdraw, it may also decline as well. It may also be loss making as well, and as a result, the companies suffer, and at the same time, the customers who bought that particular share of that company will also suffer as well. These are the likely consequences if the foreign portfolio investors take out their money, pull out their money from the Indian market. It is this that we have to understand with respect to this article. Now let's look into the next article. This article says, are fears of stagflation impacting the market? Let us try and understand what is this article all about. There are many countries world over which are currently witnessing inflation. The inflation that they are witnessing might be because of multiple factors. As a result, there are some economists who also go on to say that countries in the near future may also face stagflation as well. So this article here is speaking about stagflation. Let us try and understand what is this concept of stagflation. When it comes to an economy of a country, there are three important parameters on the basis of which the economy of a country is judged upon. What are these factors? One is the economic output. This is measured by the gross domestic product. Then what we have is the level of unemployment. This generally has to be low. And the third is with respect to the inflation. So if we have to measure the overall outcome of that particular country, how that country is performing, these three important parameters become very important. So if we speak about economic output, how much is the country generating? What is the GDP of that particular country? If the GDP constantly increases at about 6%, 7%, 8%, 9%, so on and so forth, it means it is increasing consistently. So the economic output of that particular country is measured as a parameter for the overall progress of the country. When we speak about employment and unemployment, the number of people who are unemployed has to be comparatively less. If the unemployment increases over a period of time, this means the government will have to sell a lot of money, and these people would not be able to buy the goods as well, and this ultimately means that when you're not able to buy the goods, the product will not serve its purpose, and as a result, it might result in recession as well. So more the unemployment, more could be the problems in the market, and the industrial output will get stagnated. And finally, what we have is the inflation, which means for a particular good, the price of that particular product might be exorbitant, it might be high, and people may not be able to buy that particular product as well. If you take the example of Sri Lanka, a kg of rice is currently about 300 rupees. A fertilizer bag bag is about 11,000 to 15,000 rupees. So what you have is inflation in Sri Lanka, and people would not be able to buy a particular product. So on the basis of all these three parameters, we would be able to define the health of an economy. So if we have to speak about the health of an economy, what you constantly require is an economic output. So the output has to grow at an healthy pace. So this has to increase every year. So the first consideration for a particular country is that its economic output should increase considerably over a period of time. This should also mean that as and when the economy improves, the unemployment crisis also comes down as well. The unemployment ratio will also be low as well. And if there is unemployment which is comparatively low, people would also be able to buy the products because they have money in their hands. And if the inflation should also be in a healthy range, the healthy range will be defined by that particular central bank. And when it comes to India, we have the Reserve Bank of India, which has said that the inflation should be within the bracket of 4 plus or minus 2. So it can go up till 6, it can come down to 2. So it has to be within this particular bracket, and this will be managed by the central bank, or for India, it will be the Reserve Bank of India. But what is the issue? There are two important issues that we have to consider. One is there is high economic growth, and when there is high economic growth, this could result in inflation. Why? Because when there is growth in the economy, people have a lot of money and they would be able to buy the products, which will result in inflation increasing. So this is one aspect. So when there is high economic growth, there will also be inflation. It is at this particular moment what you will have is the Reserve Bank of India or any central bank stepping into picture. This is one issue. The second issue is where there is high inflation, but there is a lot of unemployment crisis, and at the same time there is not much of economic activity, which means there is stagnation in the economy, high unemployment, and at the same time there is high inflation as well. This is what is called as stagflation. So what is stagflation? Stagflation can be broken down into two parts. One is stag, the other is inflation. Where there is stagnation in the economy, not much is happening in the economy, there is no growth as well, the unemployment ratio is comparatively high, but leading to all this there is no growth, resulting in what is called as inflation as well. So inflation along with stagnant economy is what will result in what is called as stagflation. So a stagflation basically means that there is a simultaneous increase in inflation and stagnation of the economic output, which is called as stagflation. Let us take one of the examples. Stagflation was first recognized during the 1970s when many developed economies experienced rapid inflation and high unemployment as a result of oil shock. What exactly happened? Back in the 1970s, you had the OPEC, which stands for the Organization of Petroleum Exporting Countries. For example, Saudi Arabia, Venezuela, so on and so forth. These countries came together and they decided they'll put an embargo on the exports of the oil products to the Western countries. So what did they do? They put a restriction about the exports to the foreign countries. So whenever there is an export restriction imposed on oil, this will impact multiple sectors. How? If oil is not exported to another country, they would not be able to export. How? The logistics sectors will be hit, and as a result there will be less number of products that will be sent from the manufacturing entity, the industry, to the ultimate customer, and as a result inflation increases. So when inflation increases, companies would not be able to sell their product, and as a result they would not be able to pay salaries to their people, and ultimately they may also have to push out their people as well. So because they had imposed on embargo a restriction on the oil exports to the Western countries, this resulted in high inflation and also high unemployment. This resulted in what is called as the stagflation. Now the most important question is, why are the economists predicting stagflation for multiple countries world over in the next few months? That is because as of now, countries have yet not recovered from the COVID-19 pandemic. There was a lot of restrictions that were imposed during the COVID-19 pandemic. They are not able to overcome. They are not able to continue with their economic growth, and this has the beating of the inflation as well. So what we have currently is the supply shock, and as a result they are expecting stagflation in the near future. Added to it, we also know for the fact that when Russia invaded Ukraine, multiple exports also came to a standstill, and because of which inflation is running high in majority of the countries. So inflation, added to it, we do not have economic growth, added to it, there is high unemployment as well. All of these are leading to what is called as stagflation in multiple countries. So in order to overcome it, what we require is a gradual progress, and we have to ensure that there is price stability in the market. To ensure that there is price stability, the global community will have to come together. They have to bridge the differences, and ultimately what we have to do is bring price stability and overall economic growth to bring an end to the stagflation. It is this that we have to understand with respect to this article. Now let's look into the next article. This article says, what are the latest guidelines on monkeypox? There is another article which says monkeypox virus mutates at a higher rate. So these two articles we will club together and understand what is to do with the monkeypox. When we speak about monkeypox, this happens to be a viral zoonosis, which means it is a virus that is transmitted to the humans from the animals with symptoms very similar to those seen in the past in the smallpox patients. So basically, it is less severe than the smallpox. It is caused by monkeypox virus, which belongs to orthopox virus genus of the Proxiviridae family. There are two clades of monkeypox virus. One that belongs to the Western African clade, the other belongs to the Congo basin, which is the Central African clade. So this basically means the ancestor might be the same, but there are different way it interacts with that particular body. Why is it called as the monkeypox? That is because the initial discovery was made in the monkeys in a Danish laboratory back in the year 1958. The first human case was identified in a child in the Democratic Republic of the Congo in 1970, and monkeypox virus is transmitted from one person to another by close contact with lesions, body fluids, respiratory droplets, contaminated materials such as beading. The incubation period of the monkeypox is usually from 6 to 13 days, but can also range from 5 to 21 days. So what are the symptoms of the monkeypox? So when we speak about this particular virus being transmitted from the animals to the human beings, they generally have symptoms like fever, headache, muscle ache, backache, exhaustion, so on and so forth. It also causes the lymph nodes to swell as well, which smallpox does not happen. So what is the present context? When we speak about the present context, India's health ministry has issued guidelines on the management of the monkeypox disease. So what is that they have said? According to them, it is a 23-page document which clearly gives an idea about what is this disease all about, what are the symptoms to this particular disease, and in case there is a person who has traveled to those endemic countries or those countries where this particular disease is currently prevalent, and if he comes back to India, if he has certain symptoms, what are the measures that needs to be followed is what is this guidelines all about. So basically it goes on to say that if there is a particular person who has certain symptoms which includes swollen lymph nodes, fever, head body ache or profound weakness, and other symptoms like pain in the eye, blurring of the vision, shortness of breath, chest pain, difficulty in breathing, altered consciousness, seizure, decrease in urine output, poor oral intake and lethargy, such people should be monitored for as much as 21 days. So there are people who've gone to those countries where there is presence of this monkeypox virus, or even if it is not endemic to that particular region, if there is a discovery in any other country, and if these people have traveled and come back to our country, so these people, if they have these symptoms, they would be monitored for about 21 days, says the Government of India guideline. So when it comes to this particular disease, it usually infects all type of people. It can be the old, it can be us, it can also be people who are much young as well. But when it comes to the children and adults, because they have a healthy immune system, the number of cases have been comparatively less. But there are two high risk groups. One happen to be children or infants who are less than 6 months, and there are also older adults as well. Because they do not have much better immune system, they can also succumb to the monkeypox virus. So everyone can be infected, but the ratio is comparatively more in the older adults, as well as it can impact the infants as well. How are the tests conducted? When we speak about the test, what exactly happens? We do not have enough number of laboratories which are looking into this particular monkeypox virus. As a result, they would conduct unique sequences of viral DNA either by polymerase chain reaction or sequencing, much like a test of the COVID-19. So this will be sent to the Apex laboratory of ICMR NIV Pune, routed through the integrated disease surveillance program network of the respective district or the state. So this will be sent to these centers, and ultimately whether they are infected or not will be testified. How prevalent is the monkeypox globally? When it comes to multiple countries, they're all infected. There are certain countries called as the endemic countries where this virus is usually seen. There are also countries where this virus is not usually seen, is also getting infected, people are getting infected. These are called as the non-endemic countries. So if you speak about the endemic countries, we have, according to World Health Organization, Benin, Cameroon, Central African Republic, Democratic Republic of Congo, Gabon, Ghana, Ivory Coast, so on and so forth, which are the endemic countries. So it is where the presence of the virus is comparatively more. But apart from these endemic countries, there are 12 other countries where it is not generally endemic. So this includes countries in North America as well as in Europe. If you consider countries in Europe, we have United Kingdom, Spain and Portugal, who have had more number of people infected because of the monkeypox cases. Till date, the most prevalent one happens to be the Western African clade over the Congo Basin clade. Are there any vaccines right now? Historically, vaccination against smallpox had been shown to be protective against the monkeypox. One of the vaccines, MVABN, and one specific treatment, tecovirimet, were approved for monkeypox in 2019 and 2022 respectively, but they aren't available as much now. So what is that we have to do? We have to identify what are the symptoms that person is facing. If a person is facing dehydration, he has to be treated with oral fluids. If that person is having fever, he has to be given sponging and paracetamol, and if that person has nausea and vomiting, he has to be given antiemetics as well. So these are some of the measures that have to be taken in case a person is infected with monkeypox. So remember, these are some of the guidelines given by the Ministry of Health in India. Now let's look into the next article. This article says the cartel and its allies that keep oil on the boil. The article here is speaking about OPEC. It also makes a mention of OPEC plus. Let us try and understand what is the author trying to convey. When we speak about OPEC, what does it stand for? It stands for the Organization of Petroleum Exporting Countries. This happens to be a permanent intergovernmental organization. When was it created? It was created back in the year 1960 after the Baghdad Conference. After the Baghdad Conference, countries like Iran, Iraq, Kuwait, Saudi Arabia and Venezuela, the five initial countries, they came together and created what is called as the OPEC countries. Where is the headquarters? As of now, today, it is in Vienna, but initially it was in Geneva, Switzerland. But now, remember, it is in Vienna. Which are the countries which are part of OPEC? We have Saudi Arabia, UAE, Iran, Iraq, Kuwait, Algeria, Angola, Equatorial Guinea, Gabon, Libya, Nigeria, Republic of Congo and Venezuela. There are about 13 countries. These 13 countries are part of the OPEC. What are the objectives of the OPEC? It has two important objectives. One is to ensure that there is production of the oil and this oil is exported to multiple other countries. There is stabilization of the oil, and this also ensures that all the customer get the oil on time. So unification and coordination of petroleum policies among the member countries in order to achieve just and stable prices for the petroleum producers, ensuring of an efficient, economic and regular supply of petroleum to consuming nations, and an adequate return of the investment. These are the two major objectives of OPEC. As part of the assignment, please put on the comment section which country has the most oil reserves in the entire world. Please put it on the comment section. What are the functions of the OPEC? The OPEC member countries adjust their oil productions activities in order to bring stability to the petroleum market and help manufacturers get a good return on their investments. This policy is also designed to ensure that oil consumers continue to receive stable prices of oil. Twice a year, the Ministry of Energy and Hydrocarbon Affairs meet twice a year to review the status of the international oil market and decide upon steps that will bring security in the oil market. The member countries also hold other meetings that address various points of interest, including that of petroleum and economic experts, specialized bodies such as committees and panels in charge of the environment. So these are some of the functions when it comes to the OPEC. Now the most important question is, what is OPEC plus? We have OPEC members plus another few countries. So this includes other oil producing countries like Russia, Azerbaijan, Bahrain, Brunei, Kazakhstan, Malaysia, Mexico, Oman, South Sudan and Sudan. So you have OPEC countries which are mentioned 13 in number, and if it is OPEC plus, there are about 10 other oil producing countries. So this means OPEC plus other countries, which is what is called as OPEC plus. When did it come into existence? It came into existence back in the year 2016. Why did it come into existence? So that these OPEC countries along with other countries are able to coordinate with each other and ultimately regulate the production of oil resources. So in order to regulate, what they have is the Declaration of Cooperation, where countries will work together to influence the global energy prices, and in order to ensure that this is implemented, you also require an institutionalization as well, for which what they have is called as the Charter of Cooperation. So this particular charter provides a platform where they would be able to discuss, deliberate, exchange views regarding the global phenomena when it comes to the oil and the energy market on the basis of unanimity, on the basis of consensus. What they also do is bring stability to the oil production when it comes to the global phenomena. Why are we discussing this? That is because OPEC plus countries and other major oil producers are in the limelight as the global oil prices soared above 120 a barrel as supplies failed to keep up with the rising demand. What is the issue right now? During the 2020, what we had is the COVID-19 crisis. When COVID-19 hit all the countries, most of the countries did impose lockdowns as well. As a result, the economic activity was not happening at a proper pace. This also meant, since there was lockdowns that were imposed, not much of petrol consumption happened during this period. This meant that the prices of the oil dropped down immediately. It also went down immediately. This resulted in greater losses for these countries. As soon as the COVID-19 started declining, ideally what should have happened? These countries should have also increased the production, but all these countries came together. They did not increase the production. They started limiting the supply as well. And when they started limiting the supply, this basically meant that it could be a problem for all the consumers who are buying the petrol products. So the economists believe that this has adversely affected the world economy. Why? Because these people are limiting the supply. They are not producing so much of oil, and as a result, it is the consumers and the economy which are bound to suffer. In order to overcome this particular issue, we have multiple countries which have taken their own progressive action. When you consider United States of America and United Kingdom, they are trying to put political pressure on all these countries. And when it comes to the United States of America, it is also increasing its own domestic production as well. It is also increasing the shale production as well. As a result, to a minimal extent, they are not facing the heat of this limited supply. But when it comes to India, India has very minimal domestic reserves. Most of the energy reserves for India is imported from the West Asian countries, and as a result, India, in order to prevent the brunt of this limited supply, will also have to bring structural reforms in the energy sector. And an add-on and a booster for India right now is, since Russia has been imposed with sanctions, Russia is also providing petrol at a very low rate. So India should reserve as much as possible, says this article. So going forward, there is mixed opinion that there is OPEC countries which would be able to control the prices to a larger extent in the near future, say few economists, but there are also few economists who go on to say that there are many countries who are planning to switch to alternative modes as well. They're looking at renewable energy sector, they're making use of the battery as well, EV technology. So the amount of power and influence the OPC will have in the near future may also decline, say few economists. This might be a long-term strategy, but as of now, in the short-term game, the OPEC will still have the control, is what is this article all about. Now let's look into the main practice questions. Discuss the likely origins, symptoms, modes of transmission and treatment for monkeypox. So please write all your answers on the comment section, peer review, and if you wish to upload an image, you can also visit our website, upload an image and also discuss with your friends as well. So this is it for today. Thank you for watching. All the best.